the second last panel, and this is sort of part of the gateway into tomorrow's conversation as well. In advance of it, I've described today as it's a familiarity. The whole point of today's sort of narrative speaks to the fact that these are adjacent to everything you're doing day to day. You might not have looked at it. You should look at it more, or it might be changing quickly. That's the today narrative. The tomorrow narrative, largely I've described as face melting. And I want people to go into tomorrow and say, what have I not seen? You know, how did this happen in my absence? You know, a lot of businesses that you'll see and be exposed to tomorrow are moving at an extraordinarily quick pace, and it'll be disorienting. Some of the technology is difficult. It's a very different day to today, deliberately crafted. So this is sort of the gateway conversation. This panel draws these two things together. I think ultimately much of the value we will find in this ecosystem is this bridging of traditional finance, centralised finance, and DeFi. And I think once people realise you don't have to be all of one or all of the other, and that these things will merge in a lot of respects, that's where a lot of great business opportunities will come. So I will welcome up to the stage the group, and you should all know that the reason I'm so bossy is because Rob gave me a job at Blockchain Australia about 20 months ago. So if you don't like what I'm doing, it's this man's fault that I'm here right now. So I welcome the group up onto the stage.
Everyone? Yeah. I'm going to sit. It's the end of the day. We're at the death, so actually my panelists are sat in exactly the right places according to my mental model, which is great. Thank you everyone for still being here. I know you're here for Fred and not for us, but we'll try and do the warm-up act for him. Steve's correct, I did hire him. I think Adam was the one who twisted my arm and said we should hire him, and against all better judgment, I said yes. And he's done a brilliant job. This is the first day of a whole week of amazing, amazing stuff. So I suggest you stay for the distance and see all the amazing stuff that Australia is doing in the blockchain and distributed ledger space. For the next 25 minutes or so, we're going to be talking about building bridges between centralized finance and decentralized finance. The whole narrative today has been about Web 2 to Web 3. I mean, who could have imagined a year ago that we would have two senators stand up on this stage and talk about Web 3? No one was talking about Web 3 a year ago, right? Crypto maybe, Web 3 no. It's part of our vocabulary now. And the move from CeFi to DeFi is the finance kind of lens on all the other things we've been talking about. So Joe Lubin talked about moving from silos to community. Scott Farrell talked about systems to ecosystems. We talk all the time about data to tokenization or tokenized data. And so what I'd like to do, panelists, is open up the mic so you can present yourselves and your respective organizations. But in terms of building bridges between CeFi and DeFi, I think it would be useful to, the bridge metaphor actually works pretty well, kinda. And so when you're building a bridge, you need rules, you need kind of regulatory aspects. So I'm gonna ask Danielle to talk to that. Then you need infrastructure, and I'm going to ask Stephen to talk to that. And then use cases, and Nigel's got a long list of use cases that we can talk about. But Danielle, please start to introduce Northern Trust and,
sure.
and talk a bit about regulation.
Okay. So Northern Trust is a custodian bank, and we service clients globally across the sovereign wealth and super and pensions market and funds. So our bridge is really to bring the institutional marketplace to the digital asset landscape. And that started through direct investment, experimentation and building live products through blockchain. And an important part there is the advocacy, because part of what we need is the regulatory certainty, asset safety and assurance for our clients. So a lot of that has been working with global regulators around the narrative for policy development, ensuring that enforcement isn't prohibitive to the adoption of digital assets or the utilisation of technology. So that's our bridge. And we are now starting to look outside of public market assets to what I'd call more the alternative asset classes that have lacked traditional infrastructure, where the distributed or blockchain technology could be better leveraged, very much around that ecosystem and life cycle view around supporting alternative assets in a totally, I guess, different technology base.
And is Northern Trust actively working in that space?
Yep, so we have a number of live commercial initiatives based on blockchain. We started in the private equity funds administration ecosystem. That's now a licensed technology, and we actively administer private equity funds on blockchain technology. We've invested principal assets in bonds. We've supported tokenized exchanges where we provide traditional custodian and administration services, and we're active in, I guess, payments and stablecoin initiatives in an administrative and integrative capability. And that's really about needing to build that. There's no substitute for the live participation in blockchain technology in a regulated institution. And that's not an easy path, but you have to be on that journey, and it needs to be a multi-year journey. So.
Great, I might come back to the regulation bit. So Stephen, Fireblocks, personally I hadn't heard of Fireblocks maybe 18 months ago. Now it's everywhere. So what's the difference in the last 18 months that Fireblocks has kind of exploded on the crypto consciousness?
Yeah, so Fireblocks is a secure digital asset infrastructure company. In essence, we focus on providing technology to institutions to be able to engage in digital assets, right? And there's been an absolute growth or more of a curiousness around digital assets and the use cases that can be derived both in the natively digital space as well as in the traditional space. Where our role really sits in terms of that connectivity between CeFi and DeFi is this ability to create secure infrastructure that allows folks to access these different spaces and technology applications. So as you think about maybe a year ago, right, in the earlier senses around DeFi, the complexity of actually engaging with smart contracts in these different applications was something that required you to have a strong cryptographic basis or a strong security basis in order to engage in those spaces. And not every firm has that, right? And the idea really behind Fireblocks is to take what is a complex task to secure private key infrastructure and all the components and the ecosystem and connectivity around that and simplify it into easy to use kind of technology stack. Right, and that's our focus. And we've done a lot of that within the DeFi space. So enabling our customers to connect their wallets and the infrastructure that they maintain through our technology infrastructure directly into these different applications and ensure that basically they're operating in a very secure way. And we're thinking more critically around the security around these different applications and things such as the ability for different regulated institutions to be able to operate in these different applications. So Aave Arc is an example of this as a first use case, which is a regulated DeFi pool. In essence, all the participants in that pool have been KYC'd and whitelisted within the pool to ensure that basically there's a minimum threshold of participants in that pool. Now, all the complexity around the settlement of assets and the kind of the exchange of the assets are still done at the smart contract application level, right? But you still understand that in essence, everyone is able, who's participating in that pool meets a certain threshold, right? And then we secure, right, the interaction to those different applications as well. So, that's our job, right, in essence, to make something that is quite complex a bit more simple. And in doing that, that's kind of where you've seen the growth of Fireblocks over the last 18 months.
Yes, fantastic. And and you're chain agnostic as well. So you've got this layer, this abstraction layer, which enables this interoperability that we all talk about because it's that next stage of breaking down the silos and turning it into ecosystems and communities.
Yeah, correct. I mean, we use multi-party computation, so it sits above the blockchain, so we are agnostic. So we work with clients that are using, we support 31 different protocols, 1,000 different tokens, but we do both on permission basis and on open basis as well. So I think from our perspective is to build a common layer that allows different use cases across the board without necessarily having to change the underlying infrastructure stack to meet these different use cases overall.
Yeah, fantastic. And Nigel, you you lead the banking services portfolio for ANZ, and within that is digital assets as a team as well, which is a fairly new team. Do you want to say a little bit about that and what you're doing in the bank?
Yeah, sure. Well, they're a pretty new team. Like most digital asset teams in Australia, they're pretty new, probably born this or last year. But look, we had a view that that maybe the bridge between CeFi and DeFi wasn't quite as far as we thought. The business models look very familiar, right? Even the individuals were former bankers more often than not, right? So we were thinking, well, what is it about DeFi that we could deploy safely based on our customers' needs and curiosity from a CeFi stage point? And we were waiting for people like Stephen to come along and say precisely what you just said, right? Take the complexity out of our lives, but give us assurance that you can create a bridge between for an example, a digital exchange or a DeFi venue potentially in the future, but that we at ANZ can actually have jurisdiction over the minting and the whole life cycle of that coin. Minting, burning, redemption, all of those functions. We needed to learn how to do that because we wanted to bring our picks and shovels to the gold rush as well, right? We wanted to have wallet services, custody services, and a whole range of other services. We didn't expect to manufacture them, but we wanted access to them. We wanted them to be assured. We wanted them to be grown-up services, basically. And we're seeing much, much more evidence of that. And we needed compliance. We needed obligation management. We needed all of those services. And the conclusion we drew from having done that, and we have got a number of coins in test at the moment, and we've got a really fantastic team who've worked incredibly hard, including with Stephen and his team, to monitor that life cycle of the coin all the way through from that minting through to redemption and burning. And what we've learned on that journey is that there really isn't much of a bridge to cross. But we need to obviously exist within our own regulated perimeter. And based on the needs of our customers, we are moving further and faster than we ever thought we could. And one of the learnings has been, in conclusion, is that I draw conclusions with, people talked about the MPP payment system today, and Rob, you and I talked about that many years ago, but that's a big piece of infrastructure, real-time, 24/7, very contemporary, but it took a lot of money and a lot of time to build, right? And there's ongoing investment there. When we look at this sort of, not the DeFi world, but the digital asset world and the service providers in that world, we conclude that we can stand up a capability, digital asset capability, really quickly with assurance and governance. And that to me is the difference, is the speed with which you can move and the cost that you can move at. It's a variable cost rather than heavy fixed infrastructure. And that to me is this transformation that we've been talking about within the company, about the transformation of financial market infrastructure from this digital kind of Web 2 world to this tokenized Web 3 world. And we're seeing it play out.
Yeah, it strikes me that, the fintech space, we've been talking for a long time that, in order for the startups to compete with banks, they need to collaborate. They need to create these ecosystems. They need standards to enable this to happen. And what you're saying is that the banks are actually recognizing that as well. You need service providers. You need the Fireblocks of the world. You need the on-chain analysis tools to be able to manage the risk.
Yes.
And in terms of regulation and what you're doing about your assets, your digital assets under management, are you seeing the same thing? Are you partnering rather than building? How are you bringing those products to market?
Yeah, so I guess our core service is custody, and we do that for traditional assets. With crypto assets, we have a subsidiary, Azodia, which is a co-investment with Standard Chartered. We felt it was important to enable it to run like a fintech, but with the grandfathering of two heavily regulated entities to give it the compliance standards, let it run its own course, independently regulated and licensed in market to provide custody services. They just run at a different timeline to core banking. And so it is important to work with regulators. That can be a long journey. So that whether that's a licensing of a traditional custody for crypto assets or working with regulators on, running and hosting nodes, participating in consensus, all these things take time to develop. They can be traditional insofar as if it's a regulated asset, it's nice and easy. We can operate under the existing regulatory frameworks. If the borders are blurred, it becomes a little bit more difficult for a traditional firm to know where the separation is on the regulation of the outcome as opposed to the roles or the technology in that process. So it just takes time, and jurisdictionally that can be very different between a North American journey and an Asia-Pacific journey. So a bit more complex that way.
And Stephen, dealing with regulators around the world, different jurisdictions, are you seeing more commonality than difference, or the lane that you work in? Is there a consistency of view for the products you're delivering?
Yeah, so I mean, we are an infrastructure provider. We're not regulated, but our clients are regulated, right? And a lot of them have a burden to make sure they're proving to regulators that they're operating above board and they're following all the best standards that they can. Now, I think one thing we're seeing across the board is if you look at jurisdictions like MAS in Singapore, you look at BaFin in Germany, FINMA, they are quite progressive. I think BaFin released a paper on DeFi that was pretty positive in terms of the disruption basis that they think DeFi can have. You look at what's happening in Abu Dhabi, again, they're quite progressive in their stance towards bringing both technology infrastructure providers as well as regulated entities to be governed kind of across the board. And so our job is to work with our clients and understand what are the concerns, what kind of questions do they have to answer from regulators, and how do we build in tools and applications within our infrastructure that make it easy for them to then either plug in existing infrastructure that they have to kind of create a uniform basis across the bank, or connect with leading providers like Chainalysis, Elliptic, and others, right, such that they're able to get to the best of breed across the whole ecosystem. I think the universal difference is how much the space has progressed in terms of understanding the regulatory needs that folks, our customers have, and then providing best-in-class solutions to them meet that.
Yeah, thank you. Nigel, one of the things that resonated with me with the previous panel was the discussion about stablecoins, which is, I think, as a payments guy, I think of as infrastructure. Stablecoins actually represent the rails onto which you can build use cases. And then that conversation around sustainability, around ESG, which wasn't mentioned, but in my mind, sustainability and ESG are two sides of the same coin. And as you know, something I'm particularly passionate about, but ANZ has a strong sustainability focus as well on behalf of your customers.
Yes.
Are you blending that into your projects? Is there anything you want to talk about on that?
Yeah, definitely. I mean, we have a very well articulated sustainability strategy, and we want to be a leader in that space. And we've made some announcements recently around pollination and those sorts of investments that we've made. So we're very serious about that. But what we also need to be is very consistent in terms of our digital asset strategy. Yes, we're very interested and focused on stable coins and getting those into production. But of course, the network of choice at the moment is both expensive and arguably, and we can debate this, so I understand we don't want to enter into the debate, but rather, the allegation or even the perception of, wastage or unsustainable practices around what is conceived as a contemporary new form of digital asset transactions is not really consistent. So, I know you represent the HBAR Foundation, but we've become very interested in the Hedera network. And we have, for a variety of reasons, we've deployed a coin on testnet. And the reason is that when we make comparisons across a range of the available networks, and we're pretty chain agnostic, but when we're trying to fall in line with our principles around sustainability, the Hedera network is very, very defensible in terms of the consumption of energy to arrive at consensus. And of course, the cost is extraordinarily much lower by a factor of about 1,000 in a recent transaction we did, just to prove a point, right? So it's very favourable from a set of use cases that require high throughput and scalability. And we believe that in the future, stable coins will be so commonplace that will be a fundamental requirement. They'll need to be scalable, high TPS, and we'll need to have credentials that we can stand behind.
Yeah, there's plenty more where that came from, I think, to be announced soon. I can feel the Dementor bearing down on me and sucking the joy from the room. So I think I'd better wrap up now. Thank you, panelists. It's been an awesome panel, and round of applause, everyone.
Thank you.